Forex prop firms versus futures prop firms. Which one should you pick now in 2025? So guys, I want to talk a little bit about my own experience with prop firms because most of my trading journey was built on Forex prop firms, and that's where I made the biggest part of my payouts. Over $1 million. I also was 3.5 million funded at my peak, and all of that came through Forex challenges. And I still like Forex props. They're easier to pass. You get those big drawdowns. The rules are easy, I would say. Yeah, they're a little bit more expensive, but you get a lot of flexibility for that. But in the last months, I started trading futures prop firms a lot more. And it's basically because it's very popular right now. And it's also a completely different world, right? They're cheaper to start, but in my opinion, also harder to pass. It forces a very different level of discipline, and honestly, it feels way closer to real trading because everything is exchange-based. Most prop firms now even offer both worlds, like FundNext, which we're gonna go later into this video to tell you why I think their model is very, very good and very, very special and helps you to get at the end the advantages of both worlds. So let's start with the Forex prop firms and let me present you a little bit the advantages of them. So when we speak about the good sides, it's that most traders are joining currently in the Forex space, still. It's an industry which is booming a lot and more than ever at the end. And it's basically because they have those big drawdowns. So this is the main reason I would say why the challenge feels easier with Forex prop firms. You have enough breathing room, even if the market gets, choppy, or if you had a couple of losses in a row, right? You can basically always okay, another percent down, and so on, because you have basically usually standard is around 5% daily drawdown and even 10% overall drawdown. The second thing is you have higher leverage. You can scale positions faster, you can recover faster, and you can build accounts quickly, if you know what you're doing at the end. So you can basically also pass things very, very fast, but I will also tell you then very, very fast the downsides of these things as well. Number 3 are the simple rules, right? Depending on the firm, the rules are straightforward. You follow daily drawdown, you follow max loss, some news restrictions, and that's it, Number 4, you have faster scaling, right? Most Forex firms let you go aggressive from day one. If you're consistent, you can grow extremely fast. It's kind of like, get millionaire overnight, because they offer you the tools. So if you know how trading works, if you're consistent, and if you can just execute everything the right way, in just a couple of weeks, you can have such big accounts and also a bunch of payouts. Number 5, it's beginner friendly. This is the most forgiving environment for new traders who are still figuring out their style. All right. But now to the disadvantage. All right. Of course, it has downsides, The number 1 I would say is the cost. It's simply more expensive to start. You pay a lot up front unless you start with the smaller challenges. All right. But then you don't have this huge advantage anymore. The rules are also easy, but that can make you lazy, High drawdowns make people take bad trades because they feel safe, all right? So I know that happened to me very often. You just go crazy sometimes because you feel I have so much, and then you just, I just take the trade. It's not in my trading plan now. It's not the best, but I just take it. That's kind of the mentality most have. Number 3, the execution depends on the firm. It's OTC, so the Fed is the feed is not centralized. Different spreads, different fills, different slippage, right? This can be hard. Very often, traders are complaining about that. They say okay, I got stopped out on this account. On the other one, I was not stopped out. Here, the spread was so big. Things like that, sometimes they even say, when a prop firm doesn't run the best way anymore, and for instance, they have some risk management problems, they kind of like can increase that. They can just literally increase the slippage on each trade you execute. Happened to me recently on one of the prop firms, and I was like, what happens? Like having like I don't know how many pips spread at the end for my execution, and I'm like, okay, I need to perform very good on the trade to even cover up the slippage. That makes it even harder. Number 4 disadvantage is long-term consistency is harder to maintain. You can pass easily, but staying funded and stacking payouts consistently is a different story. I would say the reason for that is because, you might put under restrictions. Like this is right now not only about Forex props as only for them, but it's also in the challenges then as well. So for instance, for me, this happens not once, not twice, not like really multiple times. When you even pass aggressively, like that's what I used to do for a very long time, like going with 4% risk, to like go very fast to a 4% up or even 8% up. So I kind of like passed it like in 1-2 trades, the entire challenge. What you will receive nowadays, it's just an email from the risk team that you're an aggressive trader and you have to maintain certain things. Like for instance, if you keep trading aggressively like that, they will at the end put you under restrictions. And they do this because they need to do it. All right. The interesting thing, what you need to understand about in general about the Propfirm model is you're not trading real funds. Like you are not even trading for real. And that's why it's easier than, for instance, trading with your personal account. Everyone who knows this will understand it, because the thing is, trading with your personal account is probably something most traders always want and is the end goal. But trust me, it's probably the hardest thing to do, because when you fuck up your psychology, you will actually destroy your complete personal account. That's the huge downside. Also, you will not make so much money as you could ever do with the prop firms. Like with the prop firms, you can like pass a 200K account, and then you can make consistently every 2 weeks around 5 to 10K. Like that's what you can do if you can trade consistently with them. And that's not so possible with the real funds. Like with real funds, you would need to flip it, or you need big account. And both of these worlds will require from you very strong psychology. And I think most traders will at the end fuck it up over there. So my point to this entire thing is actually that is the biggest downside. And at the end for Forex prop firms is that they will basically restrict you if you abuse the system going all in on trades, because the only downside you have by going all in on trades is at the end that you lose the funded account. All right, if you're funded, that means you basically lose nothing if you've had already your first payout where you've been even refunded the fees. And if you actually lose the challenge, then you just lose the fee. So just imagine you want to pass this thing quickly to like save time, and that will require you maybe to like pay for 3 challenges before finally you pass one of it. And the challenge fees are around $500 for a 100K account, for instance. Then you will take an accountant that you lose potentially $1,500 to then finally pass one. Once you passed it, you have to make around 2%, and you will at the end make even profit on top of it. And that's crazy to think about it. This is not possible with a personal account. With a personal account, to achieve this, you would never do with 100K like full port sell to potentially flip your 100K. Like it's a different world. You can flip, of course, small accounts, and you can like kind of like use the same strategy for it. But at the end, the downsides are that you will still lose a lot of money. And with Forex prop firms, you can actually go risk-free on this. And that's why they have to put you under restrictions. Either it's going to be then on the funded account or straight for the challenges as well. And that's the biggest downsides from my point of view. And it's basically they need to do that with you guys, because they could otherwise not even copy you, right? Like they also try to A-book people. And if they can do that, then for them, that's a long-term profitable model. So let's talk about the futures prop firms, guys, and the advantages of that. Now, the futures world, this is where things get more serious. The number one, it's cheaper. You pay monthly. Sometimes the entry cost is very low. Some just have one-time payment. It really depends. All right. The second thing, it's real exchange. Like there is one price, one feed, and clean data. You get real volume, real order flow, footprint, the DOM, everything that reflects true market behavior. And the thing that I'm gonna tell you here about this is why I think this is such a huge pro point is it's gonna allow you to at the end understand trading much better. Most people, they remain stuck with ICT and SMC trading, thinking this is the holy grail, thinking Forex is the real thing. But to be honest, once you are in the future space and you understand more about the things I just mentioned, real volume, real order flow, footprint, the DOM, you will understand things much clearer and therefore also have a more, I would say a stronger edge in trading. You can create out of this knowledge so much things. Number 3, discipline. Futures prop firms forces you to respect risk because the rules are tighter, and you also have trailing drawdowns, which forces you to behave like a real trader. Now, the thing is with the trading drawdown, and you will see me then also talking about this, you can see this as a pro point, right? Which will require from you to like understand how to deal with floating profits, which for certain accounts, certain trading styles, it's beneficial, while for some others, it's gonna not be beneficial, all right? But what it's gonna force you is at the end, if you think about it for a moment, is your risk management and your like the way and how you take trades need to be so disciplined, so calculated, so good, all right, that you gotta like think about this. On the Forex world, right, you don't even think about it. You would just take trade after trade after trade until you finally pass it or make some profits. And if it doesn't work, it doesn't work. If it works, it works. And here it's like, in order to make it work, you have to do so many things already correct. And that's why I would say only the more advanced traders will step into this. The number 4 is the execution quality, right? Like there's no synthetic feeds, no broker games. What you see is what you trade. And that's very cool. Like you just take it, trade, enters. That's how trading works at the end. That's how it's supposed to do. The disadvantages, right? Yes, futures also have weaknesses, right? And the number 1 is it's very hard to pass. The trading drawdown is brutal if you don't manage your risk. Like it's gonna destroy you, and I've destroyed so many accounts with that. But to be honest, I've learned so many things because of that. And I know if I want to go for such challenge or not. I still like to use sometimes trading drawdowns, but basically not always. Number 2 is less leverage. You can't go crazy with oversized positions. It's cleaner, but slower. To be honest, I would say the leverage is still okay. Like I haven't seen here any issues so far. Especially if you trade like I do gold, right? I don't need more than one contract. One contract is already high. Sometimes I like to use 2 contracts, but it's like crazy when I use 2 contracts because the market is moving so fast and I'm allowed to take up to 5 contracts. So I would say it's okay, like depending on like what challenge you use and what Propfirm you use. And I will show you then also which ones I use. And then you will understand why I take the best of the bests. Number 3 is payout caps. In the beginning, your payouts are limited with most firms. You have to build your track record first. Like they allow you, like some allow you 100% at the beginning or only 90%, whatever. Some even less. There are different models, so we cannot say it's always a disadvantage, but most of them have certain payout caps that you cannot earn more than that amount. All right, number 4, slower growth. Yeah, right. You build stability before size, which is good long term, but less exciting short term. But also here is a good pro that you can go for, and that's basically you could actually, buy more accounts. That's the thing in futures. Most people just buy more accounts with one prop firm, go max allocation in terms of challenges with one, try to pass all of them at once, treat them all as one account, copy through them with some copy trader, and basically doing the risk management through the prop firms like that is also what I would recommend you. And because of that, I would say you don't even have this disadvantage. So this is probably, from my point of view now, the biggest advantage point you will have with futures prop firms, because you can buy so many accounts and you don't need to make so much profit on each account, because through having multiple accounts, just think about it, about Apex, for instance, where you can buy up to, I think, 20 accounts, which is insane. All right, so let me tell you now which prop firm I like to use, and that's basically here, Funded Next. They also have currently a Black Friday offer, which I would highly recommend you guys to take advantage from, because it's not going to last forever. Here, the next 72 hours is going to be there, and it's an incredible opportunity at the end to like take advantage of it. Go for it. I like to use here really both worlds. Like here, you can use the Stellar 2-step with 200k. I would really recommend you, right? You have here the 10% maximum drawdown, 5% daily drawdown. It's crazy. You can go up to 95% of your payout that you can receive. So it's really crazy. The prices right now here, you see, and you can now save lots of dollars with their Black Friday, And also when it comes now to the futures, because I like futures now a lot, here you can go for their futures accounts, which is gonna have only 25, 50, and 100k accounts. And then here you see you have basically rules such as 3k drawdown and 6k as a profit target. So it might seem hard, because the drawdown, it's not 101 like it is on the Forex side, right? Forex side is 101. So you have like 10% overall, and 10% is the profit target. Like here on Funded X, you have only 8%, which is even less, if you think about it. And here it's out of a sudden double as much, but also the price is very small compared to that. And with the Black Friday, will even less. So it's gonna be crazy for you guys to take advantage of it. I'm with Forex and with futures, and I think it's a very crazy opportunity currently in this space. All right, so which one is better, to come to a conclusion? For me personally, I built everything through Forex props. That's where the million in payouts came from. But now I'm growing steadily in the futures world too, even though I don't have years of experience there yet. The last months showed me how powerful futures can be, and when you combine structure with experience. So honestly, there is no perfect choice. Both have advantages, both have their disadvantages. It depends on who you are and how you trade. So my conclusion after doing both, just use both, like why force yourself into one box? Learn the rules, know what you get into, understand how each system works, and then pick the environment that fits your style, or combine both like I'm doing. Like Forex builds speed, futures builds discipline. Together they build a complete trader, and that's with Funded X offering both worlds. You don't even need to choose, you just need to know how to trade at the end. So with that being said, guys, hope you like this type of video, and see you in the next one.